right, good morning, everyone. It is 8:50 in the morning of the 21st of June, 2022, and this is my pre-market strategy session. And so today I'm starting on the 1 month chart of the SPY. And so it kind of gives a bigger idea of what's going on here. Now, we're in a bear market, and the difference from the high here to the low is 24.5%. And now if we open, let's see, we're going to open, suppose it opened right now at 371.40, and that would put us still greater than 20% down from the peak. And what's interesting here is that so this dip back here was event driven. This move back here, that was COVID. That was the lockdowns, right? And now here, what's the big difference right here is this move. This is economic. This is fundamentally driven market activity right here. And something that's notable is this big down June candle right here. May, the market went down and bounced back up and threw a lot of investors and so forth for a loop. That looks like this candle right here. It's not quite a doji. But that looks like a bottoming candle. That looks like a candle where it was sold off, and then the buyers came back in and bought it back up, and that would signal to a lot of people that we're about to see some sideways consolidation. Now June has turned out to be much different, and has really plummeted down to below May's lows. And there's no reason for it to stop really going down. It's still bearish. Economic conditions are bearish, and they're getting tougher. We'll look at a couple of things here. Before I do, I want to pull up. Let's pull up the weekly. So here we are on the weekly. There's that gap down from last week to this week. Will that get filled, anytime soon? I don't know. I don't know when it'll get filled. It could be, quite some time from now, before it gets filled. So let's go over to the daily. Now the daily isn't really showing much. This is kind of quirky, action down here from day to day. Could we see a rally? Yeah, anything's possible. I mean, getting back up and closing that gap, that could happen this week. Who knows how June's going to end? Let's see how much more time we have. Basically, almost 2 more weeks left in June. Almost 2 weeks of trading left in June. So it's going to be a time to just kind of sit tight and watch things. Well, but the VIX is looking like it's trying to put in a bull flag right here. The VIX usually doesn't put in bull flags. The low end of the risk range I have is 26.58. The high end is at 36.67. And there is this trend line. You're not supposed to chart the VIX. But you can see here this trend line, the VIX has left this trend line behind, and then there's this sort of shorter, even shorter term trend line right here that broke back up above last week. And so there are a couple of areas in here to watch for the VIX where it might be a good idea. I mean, the market, it's bearish, and so looking for a spot where the VIX looks like it's trying to bottom out is a spot to start putting on more shorts, which this turned out to be a pretty good shorting opportunity. There's 1, 2, 3, 4, 5, 6, 7, 8 days there where it was a good opportunity to start averaging into some shorts, and I did that, and I let go of about half my shorts after this June 10th spike right here, and then I let go of the rest of it around the June 13th high. And so now I'm just kind of waiting for an opportunity again for the VIX to come down, kind of bottom out a little bit more, and then go back up again, essentially. I don't think that, I mean, it could be today, it could start bottoming today. We'll see. But once again, also, the VIX hit the 35 level and then just, got beat down again. So, there are a lot of buyers at, when the VIX starts hitting 35, there are a lot of people that are coming in and buying. And I don't know, I think eventually that the market is going to disappoint those buyers. I think eventually there's going to be a big spike up in the VIX, and it's going to cause a whole boatload of capitulation on the part of investors. So we'll get, a huge spike up to, over 40, into the 40s, maybe even into the 50s up here. And then we might start seeing a short-term bottom come in on the market. Although it could also be that this just continues to do a slow burn and just the SPY and the Qs just continue to sort of drain down for the long term. Now, selling usually doesn't work that way. Historically speaking, selling doesn't. It usually what happens with selling is that the selling is. Let's go to the weekly. The selling is usually sharp and fast. It takes the stairs up and the elevator down. We're coming into some different economic times, though, where it really could be, just sort of a 45-degree angle down, rather than, we could be taking the stairs down and have an orderly sell-off for a rather sustained period, rather than just the big crash down and then a V-shaped bottom. This really could be sustained. That's the way things are stacking up right now. So the opportunities to look for are going to be on the short side until things change. This is the 10-year, 2-year spread, and you can see this pink line right here. This is the 10-year minus the 2-year rate, and this is the zero line. This pink line right here is the zero line, and we're flirting with an inverted yield curve between the 10s and the 2s. I think there are other parts of the yield curve that are inverted. Actually, we'll just go check it out here real quick. Let's go to large caps and stuff, and then. So let's see, the 3-month is at 1.6, the 1 year is at 2.8, 2 years at 3.2, 5 years at 3.3. So the 10s and the 5s are inverted already, and the 30 year and the 5 year are already inverted. So there are other parts of the yield curve that are inverted. Now I remember back in, let's see, where was it? Let me go back here real quick. Back here in this time frame, in this run up right here, before COVID was just so convenient. In this duration, this time frame right here, this is roughly September of 19 to February of 20. The 3-month and the 30-year were inverted. So you could put your money somewhere, your cash somewhere for 3 months and get a higher return than if you put your money in 30-year bonds, which was crazy. And it just we were stacking up for economic downturn right through here, But then COVID came in and just everything kind of, all the craziness happened. And so, the market, the government stepped in with stimulus and the Fed stepped in and dropped rates to zero. And that created the V-shaped bottom. Now here we are, GDP is slowing down, and the Fed is tightening, is raising rates, going into a slowdown, and so it's just fundamentally different from this 2020 crash. So we get a front row seat to see what happens as traders. We get to watch this unfold as it unfolds. All right, so the Qs, the market's up a little bit this morning. It could be a bit of a relief rally in coming up, but who knows? Something to squeeze the shorts until it's time to sell again. We'll see what happens. And then let's get over to this is the 2-year, 10-year, and here's the VIX. Oh yeah, here, look at the the 2-year. This is the 2-year, and here's the 10-year. 2-year, 10-year, 2-year, 10-year. So rates are rising, and as rates rise, that tends to be a negative for gold, for the markets. But look at gold, actually. Gold is trying to bang out a bottom right here. Once rates start to fall again, if we get an opportunity, where did they go? Let me go to my risk ranges. Once rates start to fall again, gold has a lot of upside left in it. So what I'm going to do today is I'm just going to sit tight and wait for intraday overbought signals. So the Qs are overbought on the 10-minute, and they're coming out of oversold on the 1-minute. And when the indicators are sort of discombobulated like that, so the VIX is coming out of overbought and going into oversold. And when things don't match up, when like the indicators, relative strength indicators don't match up, that tends to be bullish. So I might even try and trade to the long side today, and I'll just kind of keep an eye on what the indicators are doing. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.